Coin traders, what is going on? Thanks for joining me for the show. Looking at Algorand ALGO on that ticker. Might notice that this chart looks kind of different, and this is actually the first time that I've pulled up the 4-day chart right now on the show. So we are looking at 4-day candles effectively. And you might be wondering why specifically we are looking at the 4-day chart right now and not the 1-day. Well, we will look at the 1-day as well and also the weekly here, but specifically, like I've talked on the show before, is that we always want to look for charts that have indicators that are actually working here. And so specifically, some of the things that we're talking about in terms of what's working right now on this chart is just kind of how well these follow the exponential moving averages. So for example, right now, if we actually look in the current pattern that we have been seeing over the last couple months, very nice ride to the downside, as we do have this 12 period on the 4-day chart as a big point of resistance. So if we actually look back up pretty much right when we had our algo kit release and whatnot, we actually had a break above the 12 period, but then got stuck up at the 26 on this 4-day chart. Prior to that, off the start of the year, a very nice rally getting stuck right in the 12 period up until it actually flipped and then did have that bearish break and close below that. So one of the things you too notice about this chart as well is that we actually haven't had a break on top of this 50 period exponential moving average since we've actually come out of our bull market at the end of 2021. And specifically at the very beginning of 2022, when we actually did lose these exponential moving averages altogether, but as you can see, turned into resistance. So, and that's why on this chart, we're seen as a very nice, reliable guide to the downside. But what we actually do have, especially if we zoom out, is you can see how tight these actually are getting together. And so that's always what we look for, especially when we talk about accumulation zones and reversals, is just the price to pretty much flatline, allowing these exponential moving averages to get close together. Because ultimately, once we actually do see a little bit of upside action, it's going to be pretty easy, more or less, to start flipping these back to the bullish upside, where we do have the 12 on top, 26, and then the 50. Since right now we are in a completely bearish formation right now with the 50 on top, followed by the 26, and then the 12 on the bottom. So again, ever since we did have our all-time low come in back in the middle of June, we've actually been seeing a very nice trend to the downside following this 12-period exponential moving average. So this is going to be one of the things that we do need to see break first. So if we actually go ahead and turn off the 26 and 50, you can go ahead and look at this level pretty nicely. So right now we're looking on the current candle of having the 12-period EMA close at or come in at 11.64. And so once this actually does see a nice bullish break and close, that's going to be an extremely bullish sign, and we're going to completely invalidate this as a big trending downside resistance point like we have been seeing since basically we did break this level back in the beginning of May. Now, this definitely is not a prediction that we're going to do that anytime soon. In fact, this is why we look at this chart and this level being so relevant, because it has been holding up time and time again. So, for example, we have 1 test, we have 2 tests, we have 3 tests, didn't quite get a 4th, and then finally on the current 4-day candle do have a 4th test coming in. So since we do have this providing multiple points of resistance, we do know that it is still effective, and likely in that instance, we are going to see a little bit higher trending to the downside, which does mean in that instance holding a higher low compared to where we found our low on this candle that comes in at 1040. Now, since we're talking about downside supports, especially on this chart, you can see a very nice one coming in at 1060. Not quite the low of 1040, but that is the price level of support that we do need to actually hold. And looking left, we can also validate how well this was as an effective support point, seeing candles not being able to have a bearish close below this level. So a very strong and effective zone, especially on this chart at 1060 down to 1040. And then so looking at resistance price points up overhead, looking at a very strong resistance point. Oop, that's not it. Excuse me. A strong resistance point up overhead at 1160, followed by price levels coming in at about 1188, which also looking left was very strong resistance points as well as strong support points coming in previously. So these levels are extremely relevant, and which does mean that we're going to have a very big zone coming in between both this upper level resistance at 1160 down to the low of support right now at 1060. So effectively a 1 cent range that probably we're going to see play out a little bit stronger in the coming days and weeks here. But we do know that with every test of low, we are starting to see stair-stepping higher to low, which does mean a tightening range still overall. So we are in a longer-term consolidation pattern for Algorand right now. Now, with all of that said, are going to flip over into the 1-day chart right now, because a lot of bullish things to look at on the shorter term that we're actually eyeing and that I have been talking about over on my Twitter here for the last few days while I have been away. So I haven't been able to do this video quite yet, but if you have been following me over here on Twitter, @coin_trades is the handle. Definitely drop me a follow if you're not following me just yet. because we have been talking a lot about the patterns and setups and how we actually are looking at a much higher chance of a little bit more of a bullish upside breakout, as long as we do get a little bit of support from the rest of the crypto space. So specifically right now, we are looking at a very nice pattern over the last week and a half or so, because what we actually had is a very nice bounce off the bottom, a lot of strong upside movement with a lot of follow through. Now, unfortunately, we did get this big sell-off wick, but the good thing that happened prior to that is that the 3 bearish days following on actually completely still fit inside the body of the bullish candle that we actually had, and that we can see that where there wasn't a lot of continuation on this bearish sell-off, which did form this very nice flag pattern, leading to a very nice back test, and then we did get this little mini breakout. And although we actually haven't had our top out in price, we actually did get the bodies of the candles, especially 2 days in a row, showing a lot of nice buying, which what led to this very nice hammer candle. So like we were mentioned, resistance and rejection from these exponential moving averages, which does mean on this daily chart, this is going to be the 50-period EMA that we are getting resistance and rejection from. But right now, we're actually getting very nice support from both the 12 and 26-period exponentials as well. So hopefully these two together, especially since they are so close, are going to provide this very nice support to the downside, allowing us to set this higher low and actually make another run and attempt at the high right now, which currently for the initial move is coming in at a high of 1189. When we didn't actually get to this level, we were coming in at 1186. So just barely, which actually, if we flip over into, for example, the 4-day chart, kind of has the formation and pattern setup of a little bit of a double top coming in. So this is going to be something that we actually do have to keep mindful awareness of, because ultimately this could end up being that type of pattern, since in a double top, we see a quick run up, quick rejection, and then a slow gradual retracement and test of that level once again. And conversely, that is the same on a double bottom, where we have a very quick bounce and then ultimately a slow retest where we do get that establishment of that double bottom in that instance. So yeah, on the shorter term, this could be a setup that we're looking for. So right now we are going to need to see if we can bottom out, maintain this exponential moving average support on this 50-period EMA on this 4-hour chart, and then see another run up. Ideally, what we would see right now on the 4-hour, and sorry if I have been getting a little bit of a tangent off the daily chart that we were talking about, but we do have to know setups for shorter term charts in order to actually talk about longer term charts as well. So ideally, what we are going to see is a little bit of consolidation happening from here, establishing this big point as a very nice resistance level, and then ultimately breaking it, which would confirm it as a nice downside support, especially since we have confirmed a lot of support on the initial breakout, which is exactly what we want to see when we do have a very nice strong breakout coming off a bottom, pulling back, back testing some support, which we can see is previous resistance and also previous support, because these back tests are really where we do confirm strength of trends and moves, and where we really get our confirmation that this isn't necessarily just going to completely consolidate and then nosedive back down into lower lows. So again, now that we've had our bottom and we're actually seeing a little bit of this follow through breakout, consolidation would be a great sign, followed by another breakout breaking on top of about the 1180 level. Preferably, this is going to be my ideal pattern and setup for Algorand right now, but if we do see a slippage from the rest of the crypto space, it is entirely possible we do get that double top type formation, especially if we actually flip over into the 1-hour chart, for example. You can see that potentially we are starting to form a, you guessed it, head and shoulders type pattern if we in fact break this neckline, which was kind of previous resistance on this consolidation move on this initial pullback. So if we do get that, that would pretty much confirm that this is going to be that double top, and we are going to expect prices to completely slip and actually retest some of the lows that we have been seeing in this consolidation pattern on the longer term. So now that we have talked about that, flipping back into the daily pattern right now, that is so imperative and critical why we actually do maintain formation and hold the exponential moving average support, especially since the 12 now is flipping on top of the 26. It has been a little bit of a minute since we've seen the daily exponential moving averages this close. And actually, if we do pull up the MACD moving average convergence and divergence, you can see very nice trending upside, because we are getting closer to those exponential moving averages and they are tightening up. So like we said, after a very nice bullish movement, ideal scenario is to hold these exponential moving averages and actually allow a little bit of breathing room until we can see enough bullish support to break through a lot of these resistance downtrend EMAs. Personally, I do think sentiment is shaping up like we could actually see a little bit more of that happening. But what we do see also, and historically, is that this is a time period where pretty much now through about the fall, we get a little bit more stagnation, which is exactly what we saw, for example, on the move last year, where we had June provide us our low point and we did stabilize right around the 30-cent line until we actually broke below it back in November when we started a lot of the FTX FUD. So point I'm making is that June's actually when we saw our all-time low, so we actually could be looking at another long period of stagnation, which actually would be a good sign in my opinion, providing that additional point of accumulation. Because ultimately this could be our point to establish a longer term floor, which right now is about the 1050 level. Now, one of the things myself and a lot of other people on Twitter and YouTube have also pointed out about Algorand specifically is just the formation of this descending triangle and how now we actually did get a little bit of a breakout. So I'm going to go ahead and turn off the exponential moving averages so we can see it just a little bit better. And so yes, very nice breakout, which is exactly what we were talking about, especially with a little bit of follow through, even though we do have this nice upper wick. But since we have gotten a very nice backtest and retracement of this support, and we can actually go ahead and draw a very nice support line coming in here because we do have very nice support followed by previous resistance, looking out previous support and then previous support as well. So an extremely relevant line coming in right at 1118. But that's also why overhead we can draw another big resistance point coming in pretty much right around the 1170 line, which has actually seen prices get pushed below it since we have had our move above about a month ago, almost right before the July slippage point. So about July 18th when we did lose that resistance point. So if we can get support to hold right along the close range, right about 1136 or so, which is pretty much right where price points are, you can see big point of resistance, big point of support, and then also zooming out, big point of resistance, and then also support. So that's why these levels are just so critical and kind of why they've been forming this big stair-steppy type sideways trading pattern. But mostly if we do lose these supports and specifically down to about 1115 or 1120, if we really lose that, that's going to turn it into resistance again. And then we are going to get another test of about 1050. And that this complete breakout from this descending wedge pattern or this descending triangle pattern, excuse me, is going to be a complete fake out and a complete waste of a perfectly good attempt for the bulls to actually break out and see a little bit of upside move here. So now I want to go ahead and peep the weekly chart really quick before we wrap up and specifically just talk about the volume that we're looking at because very big descending bullish volume, and that's pretty much more or less why prices are just going sideways. So the fact that even with this much volume, we're seeing it taper off and prices are actually staying the same isn't the best sign for the bulls because they are losing strength and don't have an ability right now to push prices up with what they actually have, which is slipping. So that does mean, unfortunately, that bear pressure is likely going to end up stepping in that instance. And since all the volume that has been found previously for the bulls hasn't been met and has actually found pretty easy resistance with the bears, it's not really likely to think the bulls are going to be able to provide enough volume to the upside to actually stop any sort of bearish pressure, especially since we haven't been changing any types of trends and actually making any new highs on this weekly pattern. So again, because the weekly chart is still leaning a lot more bearish in this instance, that's another reason why we have to focus on the shorter term charts and actually see what patterns start to develop before we can react to them for the longer term. But as always, do love to know everyone's thoughts and comments down in the comments sections below. I do love getting back to each and every one of you. Really appreciate all the continued love and support that we have received so far on the channel and also over on social media and things like that. Once again, if you're not following me over on Twitter, drop a follow at coin_trades is the handle. Hope everyone's doing great, staying safe. Take care, and we'll catch you back in the next video.